Hello students. So today we are taking up with question number 8 of your study material. Now the things are going in mixed manner. You'll find that from this question onwards, some part of accounting is asked in the books of transferor company and some part of accounting is asked in the books of transferee company also. In past 6 to 7 questions, we had questions where either we had accounting in the books of transferor company or transferee. Now this is a mixed one where some portion of transferors accounting is asked and some portion of transferees accounting is asked. And as I have told you in past lectures also, I repeat it, whatever is not asked in the question, that also you self practice on your own so that you get confidence in this chapter. So even if transferee companies are asked, you have to try transferor companies accounting on your own. Even if transferor companies accounting is asked, you have to try transferee companies accounting on your own. Look at the things. Following are assets and liabilities of B Limited, and then B Limited as on 31st March 2019. Equity shares of rupees 10 each, fully paid up 6 lakhs. So 6 lakhs divided by 10. How many equity shares would be there? 60,000 equity shares would be there. General reserve, export profit reserve. What is export profit reserve? Remember that? Yes. Correct. Statutory reserve. Okay, export profit reserve comes in the category of statutory reserve. Workmen's compensation fund, profit and loss balance, 10% debentures, creditors, goodwill, land and building, plant and machinery, stock, debtors, cash in bank. A Limited agreed to acquire the business of B Limited. Let me ask you a question. Is this amalgamation or absorption or external reconstruction? Three things we studied in the first lecture. Three types of questions are possible. Up till now, all questions we had done amalgamation only. All the past questions, two companies were going into liquidation and a third company was formed. Here only one company, B, is going into liquidation and A Limited agreed to acquire the business of B Limited. This is absorption. All of you must be able to recollect this. It is absorption. Okay. We studied this in the first lectures if you remember. See this, absorption. When one or more companies go into liquidation and are taken over by an existing company. Here A Limited taken over by new company. In our example, B Limited going into liquidation taken over by A Limited. So actually this is a case of absorption. Okay. However, from accounting point of view, all are covered into only one umbrella, amalgamation. That's it. As per the accounting standard, amalgamation, absorption, external reconstruction all come into amalgamation. A Limited is purchasing it, so it is a transferee company, and B Limited is going into liquidation, old company, so it is transferor company. New company, existing company, only A Limited is there. Some existing company A is purchasing them. But A Limited is a purchasing company, that is transferee company. B Limited is going into liquidation, that is transferor company. So A Limited agreed to acquire the business of B Limited on the above mentioned date, not data, on the following conditions. First, A Limited to issue, underline, 2 equity shares, issue 2 equity shares of rupees 10 each at rupees 13, means 3 rupees is premium. 13 is the agreed value of the equity shares. 10 rupees face value shares are issued at 13. We will be taking 13 rupees value. And also to pay rupees 3 per share in cash to the shareholders of B Limited in exchange of every share in B Limited. We'll see later on when we make the workings in detail, okay? Just underline the main points. A Limited agreed to, underline, discharge the 10% debentures of B Limited, underline, at 20% premium. by issue of 12% debentures of 100 each at par, underline issue at par. This will affect last entry of transferee company's books, settlement of liability against old company's 10% debentures. In the new company A Limited, they are given 12% debentures, but there is again a complication in the language. Discharge at 20% premium, but issue at par. How to work out? We'll see in the workings. The cost of liquidation of B Limited 6,000 was online paid by A Limited. While arriving at the agreed consideration, the director of A Limited valued land and building at 9,50,000, stock at 1,40,000, and debtors at book value subject to an allowance of 10% to cover doubtful debts. Agreed value of land and building 9,50,000. Book value is 4 lakhs, but agreed value is 9,50,000. Okay, just for your reference. Next. Same way, stocks book value is 1,68,000, but agreed value is 1,40,000. Then debtors subject to 10% means we'll minus 10% from debtors. Debtors are 36,000. So what will be their agreed value? 36,000 minus 10% allowance to cover doubtful debts. So 3,600 if we subtract 32,400 will be the agreed value of debtors. Okay, I repeat, debtors at their book value but subject to an allowance of 10% to cover doubtful debts. So debtors are 36,000 minus 10% for doubtful debts. So their agreed value is 32,400. On the date of acquisition, B Limited means we are talking about transferor company only, had a liability towards workmen for compensation against injury. The amount was ascertained at 8,000 rupees, and the company means which company? B Limited itself. The company means B Limited itself paid the compensation in cash to the worker. So out of this workmen's compensation fund 10,000, 8,000 is a liability as we have to pay to the worker, and only 2,000 is in the nature of reserves which we will transfer to equity shareholders account. I repeat it. If any confusion in the video lecture, pause it, rewind it and listen once again. Okay, I repeat, pause it, rewind it and listen once again if there is any confusion. 2,000 out of 10,000 is only in the nature of reserve. On the date of acquisition, B Limited had a liability toward workmen for compensation against injury. The amount was ascertained at 8,000. So 8,000 we have to pay to the worker, that we will meet from this compensation fund of 10,000. Means out of 10,000, 8,000 becomes our liability. So how much amount can equity shareholders withdraw? Also this liability company paid in cash to the worker. Remaining 2,000 only will be transferred as reserves to equity shareholders account. Show this bifurcation in the balance sheet on liabilities side. Now, export profit reserve is to be maintained for next 4 years. This again further indicates and confirms that it is a statutory reserve because we have to maintain it for 4 more years. You are required to prepare necessary ledger accounts in the books of B Limited, means transferor company. Only ledger accounts are asked. Journal entries are not asked in the books of transferor company. And also pass the opening entries in the books of A Limited, that is transferee company. So I told you in the beginning it's a mixed question. Transferor companies accounting also some part is asked. Journal is not asked, ledger accounts are asked. Transferee company also entries are asked, balance sheet is not asked. And they cannot ask also balance sheet because for asking the balance sheet of A Limited, existing company A Limited's existing balance sheet should be first given to you. Then only we can combine these figures and make a new balance sheet. Here A Limited's balance sheet is not given, only B Limited's balance sheet is given. Therefore in the books of A Limited they have asked you only journal entries. But in books of B Limited, there was ledger account also. And in this question, don't even try with the balance sheet of A Limited. You cannot prepare it. You cannot make the balance sheet of A Limited because for that purpose, A Limited is an existing company, so its existing balance sheet should be given. Then only you can make the balance sheet of A Limited. So two things are asked here, okay? Now, I told you that in past questions, before we start solving, three things to be first ascertained. Which three things? Come on, which three things? Come on. First, is it merger or purchase? Okay, first thing to be found out. Second, method of purchase consideration. Third, come on, third, if it is merger, pooling of interest method. If it is purchase, purchase method of accounting. So first we have to identify these things. Let us go ahead. Which are the three conditions of merger? Yes, first, all assets and liabilities must be taken over. Are all assets and liabilities taken over? Come on, tell me. Business of B Limited means it includes all assets and liabilities. Okay. Goodwill, if nothing is given, we will take the difference amount. We'll see that. Land and building taken over and its agreed value is also given. Plant and machinery taken over, its agreed value is not given, means we take at book value. Stock in trade taken over, its agreed value is given 1,40,000. Debtors taken over, its agreed value is 32,400. Cash and bank, nothing is given. Business means it is taken over. Okay. Debentures taken over, against that we are giving them 12% debentures. Creditors, nothing is given, means they are taken at book value. But listen carefully, this is one more liability. Workers' compensation. Is this liability taken over? No. Who is paying this liability? Transferor company B itself is paying it in cash to the worker. Means one liability, workers' claim of 8,000 is not taken by A Limited. So it is not amalgamation in the nature of merger. It is purchase. Why? Because workers' compensation liability is not taken over. Second condition of merger, assets and liabilities should be taken over at book value. Here land and building is taken at a different value, stock is taken at a different value, debtors are taken at a different value. So even all assets and liabilities are not taken at book value. Some assets are not taken at book value. Even second condition of merger is not satisfied. First condition is also not satisfied. Liability of workers' claim is not taken over. Second condition of merger is also not satisfied. Land and building, stock and debtors are taken at different values than book values. And more so over, third condition is also not satisfied. What was the third condition of merger? Entire purchase consideration must be discharged in the form of equity shares only. Here adjustment 1, you are giving equity shares also and cash also. So even third condition of merger is not satisfied. In short, it is purchase. Okay. Method of purchase consideration. As per adjustment 1, modes of payment are given, equity shares and cash. Amounts can also be ascertained, they are not missing. So it is which method of purchase consideration? Net payment method. Okay. It is which method of purchase consideration? Net payment method. Third, because it is purchase method of account, purchase instead of merger it is purchase, we will be following which method of accounting in the books of transferee company? Purchase method of accounting. So in every question in the beginning you have to identify this. Okay. Now before we start with the solution, you are asked which ledger accounts in the books of B Limited. Make the formats. Necessary ledger accounts means it will include realization account, one page, equity shareholders account. Okay, realization account you can make almost one page. Equity shareholders account you can make around 8 to 10 lines, rather 10 lines ideally. Then A Limited account, transferee company account, 4 lines. 4 to 5 lines. Equity shares, 4 to 5 lines. Equity shares of A limited account. Also, we have to make workers claim account. Whichever liability is not taken over, listen carefully and rewind if required. Whichever liability is not taken over by transferee company, we have to make that ledger account, because that liability is going to be settled by whom? Transferor company itself. So workmen's compensation fund account, or you can make workers claim account, any of the two. Ideally workmen's compensation fund account. 8,000 of liability is not taken over, so that ledger account will also be prepared. Okay, how many lines? 3 to 4 lines, that's it. Okay, 3 to 4 lines are sufficient. Then which other account? Cash and bank account, 4 lines. Now question arise. A question will arise, sir, we did not make cash or bank account in previous questions. Why now? Because we are receiving cash from transferee company also. We have to pay cash to the workers also. So whatever cash is finally left out after everything would be given to equity shareholders. So you have to make this cash and bank account also. In which situation we have to make it? If there is any transaction of cash in the question related to transferor company. Here transferor company is receiving cash from transferee company, as well as transferor company itself is paying in cash to the workman's compensation. So we have to make cash and bank account also. All of you can pause the video and make these ledger accounts. Realization account 1 page, equity shareholders 10 lines, A limited 4 lines, equity shares of A limited 4 lines, workmen's compensation fund 4 lines, cash and bank account 4 lines. In fact, cash and bank account you make a bit bigger account, you can make it 6 to 8 lines. Okay, make this formats fast. Pause the video and make this formats, then we continue. Okay, so all of you should have done the ledger accounts format. Now before we start with the ledger accounts, first we will have to make workings and find the amount of purchase consideration. Okay, because without the amount of purchase consideration we cannot proceed with the journal entries. So working note below the ledger accounts we will do first and find the amount of purchase consideration. First working we make for debentures as we do it normally. Okay, in this question also first we make the workings of debentures. See the language of debentures again everyone, what is given to you. A limited agreed to discharge. Now discharge word is very important, it will come across again and again in further questions. Discharge means you settled the 10% debentures of B limited at 20% premium. Here premium doesn't mean that the company is issuing the debentures at premium. Premium just means you are paying 20% more amount. 20% premium you are discharging means you are paying 20% more amount. I repeat it. This premium is not the one which the company is issuing the shares and debentures at premium. Because if you see the next part, by issue of 12% debentures at par, the new company A limited, they are issuing 12% debentures that they are issuing at par. So what does this premium mean? This premium means this old company's 10% debentures of 1 lakh rupees, the company is giving 20% more amount for that. Okay, so this working note one you all will do, that 10% debentures of 10% debentures of B limited, 10% debentures of B limited are how much? 1 lakh. Okay, 10% debentures of B limited are 1 lakh. Now they are discharged at 20% premium, means we are paying them 20% more amount. So be careful with this language in all the further questions. Wherever discharge word is given, if premium you add it, discount you minus it. Wherever discharge word is given, then premium you add it and discount you minus. So here 20% premium 20,000 we will add, means what is the agreed value of debentures? Agreed value of debentures is 1,20,000. Where does this agreed value come? In the books of transferee company, not in the books of transferor company. Now, how are this discharged? Settled by issue of 12% debentures at par. At par means how many new companies debentures will be issued? Number of 12% debentures of A Limited, new company A Limited which is taking over, to be issued is equal to number of 12% debentures of A Limited to be issued is equal to 1,20,000 is the agreed value, divide by 100, means in the new company you will issue them 1200 12% debentures. Presently there are 1000 debentures. 1 lakh means 1000 debentures. But in the new company you will give them 1200 debentures, more debentures. So everyone will get more. Those who have 100 debentures will get 120. Those who have 200 will get 240 in this proportion. That way against 1000 existing debentures of B Limited you will issue 1200 debentures in the new company. Okay. So keep this in mind. Discharge means you will add the premium or minus the discount. And issue of shares is debentures is done at par. Issue is done at par means 100 rupees. If issue is done at par, then how many debentures will be issued to settle this 1,20,000? 1,20,000 divided by 100 as they are issued at par. So 1200 debentures in the new company will be given against 1000 debentures of old company. Okay. Now see, this is one more thing. Even debentures are not taken at book value. They are also taken at a different agreed value. So this again confirms that it is not merger but it is purchase. Okay, because one of the conditions of merger, assets and liabilities should be taken at book value. Anyway, we already concluded its purchase. Now second workings we will make of purchase consideration. By which method? Net payment method. So all of you, second workings give the heading purchase consideration in bracket net payment method. Now, how will you find purchase consideration by net payment method? Okay, how will you find this purchase consideration by net payment method? Modes of payment. Which are the various modes of payment? If you read adjustment 1, you will find the two modes of payment are equity shares and cash. Okay, first mode of payment is equity shares. Look at the first adjustment to find how much amount is paid by equity shares. See the first adjustment. A Limited to issue two equity shares. Okay, and then directly read the last sentence. In exchange of every means one. In exchange of every one share in B Limited. So, in exchange of every one share in B Limited, second part always take first. In exchange of every one share of B Limited means for one share of which company? B Limited. How many shares of A will be issued? 2 shares. Okay, see this once again. Read it once again. Issue 2 equity shares. A Limited to issue 2 equity shares means A Limited you will get 2 equity shares. In exchange of every means in exchange of 1 share of B Limited. Against 1 share of B Limited you will get 2 shares of A Limited. Now see at the top, this is B Limited's balance sheet. How many equity shares are there in B Limited? 60,000. So for 60,000 shares of B Limited, you will get how many shares in A Limited? 60,000 into 2 divided by 1. You'll get how many equity shares? 1,20,000 equity shares. So 1,20,000 equity shares will be given of rupees 10 each. But see the first adjustment at rupees 13. We have seen that 3 rupees is premium in the first adjustment. Here we have seen shares are of 10 but we are giving at 13. So we will multiply with 13. 1,20,000 equity shares into 13. So 15,60,000. How much we are giving to B Limited in the form of equity shares? In the form of equity shares, we are giving a value of 15,60,000. How do you get that 15,60,000? 1,20,000 equity shares of 10 each, but we are giving at 13 rupees. So 1,20,000 into 13, 15,60,000. Second mode of payment is cash. See the first adjustment again, how much cash is paid? Rupees 3 per share in cash. That's it. Rupees 3 per share in cash. So if there are 60,000 shares, how much cash will be given if 3 per share is given in cash? 60,000 equity shares into rupees 3 per share in cash means we are giving 1,80,000 in cash. So what is the amount of purchase consideration? 17,40,000. Okay, 17,40,000 is the amount of purchase consideration. So these two workings are required before we pass the accounting in the books of transferee company. All of you can pause, rewind, listen once again before you solve it further. Let us make the accounting entries now. Here journal entries are not asked, only ledger accounts are asked. So journal entries we will discuss orally and then ledger accounts will directly make by doing the posting. So all of you should recollect the accounting entries in the books of transferor company. Be careful. Transferor companies means this 14 entries, okay? Which 14 entries? First 6 closing entries. After the 6 closing entries, 7, 8 for purchase consideration, 9 sale of asset, 10 payment of liability, 11 liquidation expense, 12 preference shareholders. Okay? Then transfer realization to equity shareholders. Transfer all other accounts to equity shareholders. So these accounting entries we are going to follow. Okay, you all can refer in the summary entries again before you listen to this video lecture further. First entry, realization account debit to assets. Realization account debit means in realization account we will write on debit side to assets account to close all the assets. Now be careful when you pass first 6 entries. Okay, first 6 entries we have to pass at book value. So when you pass first 6 entries, okay, first 6 entries we have to close at book value. This I made you write in the notes. First 6 entries will be recorded at book values. So since first 6 entries are at book values, don't see the adjustment. Book values means balance sheet values. First 6 entries, just take the values from the balance sheet. So goodwill 1 lakh. Okay, in assets, goodwill 1 lakh. All first 6 entries take only balance sheet values. Book values, BV, book values means balance sheet values. Land and building 4 lakhs. Then plant and machinery 2,40,000. Then stock in trade 1,68,000. Then debtors 36,000. Then cash and bank 56,000. Include even cash and bank. Cash and bank 56,000. Now, what did I tell you earlier? First 6 entries will have single effects only because the balance sheet gets closed. Directly take this 10 lakhs. Even if you total it, it will come to 10 lakhs. Okay, so first 6 entries will have single effect, right? No! In this question, this first entry, cash and bank, will have second effect because we are making cash and bank account. Otherwise, it would not have two effects. First, you write down to balance brought down from the balance sheet 56,000. It already has balance of 56,000. Now, realization account debit to cash and bank. So, to cash and bank means in cash and bank credit side you will write by realization account 56,000. Okay, why we are making this cash in bank? Because from new company also we are getting cash. We have to pay workers also the claim of 8,000. That's why we are making it. Since we are making the account, the second effect will come. So to cash and bank means cash and bank credit side by realization account 56,000. Other items second effect will not come because those accounts we are not making. Now second entry after assets, close liabilities. Now here which liabilities we have? Debentures 1 lakh, creditors 20,000. We have workers claim of 8,000 liability also, but this will not be transferred to realization account because it is not taken over by transferee company. B Limited itself is paying cash to the worker. A Limited does not take over this liability, so it will not come. What did we see in the journal entries? That in case of liabilities, only taken over liabilities will be transferred to realization account. Here, workers' compensation fund liability is not taken over, so workers' compensation liability will not be transferred to realization account. Means liabilities account debit, debentures account debit 1 lakh, creditors account debit 20,000 to realization account. To realization, so realization account on credit side by liabilities account, and only two liabilities will come in that. 10% debentures 1 lakh and creditors 20,000. So 1,20,000. Okay. One more liability is there, workers' compensation of 8,000, but that will not be coming in second entry because only liabilities taken over are to be transferred to realization account. Single effect of these two. Third, equity share capital to equity shareholders. So equity share capital account debit 6 lakhs to equity shareholders means equity shareholders on credit side by equity share capital account 6 lakhs. Okay, to equity shareholders means equity shareholders on credit side by equity share capital account 6 lakhs. Then preference share capital we don't have, so that entry will not come. Then reserves. General reserve account debit 80,000, export profit reserve account debit 80,000, workmen's compensation fund account debit only 2,000 is in the nature of reserves. Profit and loss account debit 1,10,000 to equity shareholders account. Now statutory reserve has a different relevance in the books of transferee company. Right now we are passing whose books? Transferor. In transferor company's books, all balance sheet items are to be closed, including statutory reserve. Okay, so even if it is a statutory reserve in the books of transferor company, you have to close it. And separate entry for statutory reserve would come in the books of transferee company because it is amalgamation in the nature of purchase. However, here reserves account debit, so general reserve, export profit reserve, compensation fund and profit and loss to equity shareholders. So equity shareholders on credit side, to equity shareholders means equity shareholders on credit side by general reserve 80,000. Okay. Next, see what is the next after general reserve. Export profit reserve 80,000. By export profit reserve 80,000. Next, see what is there in the reserves. Workmen's compensation, but 8,000 has become our liability. How much is in the nature of reserve? Only 2,000. So by workers compensation fund 2,000. Then after workmen's compensation fund, which is the next reserve? Profit and loss. Profit and loss account 1,10,000. So by profit and loss account 1,10,000. Okay, now here again closing entry, so it will have single effect only, right? No. Again no, because like here cash and bank account we were making, so we gave opposite effect in cash and bank account. Same way, which other account we are making? Workmen's compensation fund. So first you write workmen's compensation fund being a liability, it's a credit balance, right? By balance brought down 10,000. And since we are making the account, opposite effect of this workman compensation fund 2,000 will come. Workman compensation fund account debit side to realization account, sorry, to equity shareholders account 2,000. Okay, to equity shareholders account 2,000. So remaining does not get closed. Why it does not get closed? Because the liability is not taken over. So 8,000 of liability which is not taken over is still remaining in this account, which transferor company itself will be paying. So because we are making workman compensation fund and cash and bank ledger account, opposite effect of these two things will come from the initial 6 entries. Okay. Then after this, sixth entry is fictitious assets, but we don't have any accumulated loss or fictitious asset. So first 6 closing entries are done. Sixth entry is not there in this question. Now, if you remember 7 and 8 for purchase consideration. So seventh entry for purchase consideration due, transferee company account debit, means here A limited account debit to realization account. And what is the purchase consideration we obtained in the workings? 17,40,000. A limited account debit to realization, so realization on credit side by A limited account in bracket purchase consideration 17,40,000. You can further mention working note 2. And A limited account debit, so in A limited account on debit side to realization account with the purchase consideration of 17,40,000. Okay. Then after purchase consideration due, purchase consideration received. Now how is this 17,40,000 received? Look at the workings. How is this 17,40,000 received? Equity shares of 15,60,000 and cash of 1,80,000. So equity shares comes in, debit what comes in? Equity shares of A limited account debit 15,60,000. Cash comes in, debit what comes in? Cash in bank account debit 1,80,000. A limited is the giver, credit the giver to A limited account 17,40,000. To A limited account, so A limited account on credit side, first you write down what all we have received. How is this 17,40,000 settled? By equity shares of A limited account 15,60,000. Okay, by equity shares of A limited account we have received 15,60,000. Cash and bank we have received 1,80,000. So in A limited credit side by cash and bank account 1,80,000. Now equity shares account debit, so equity shares on debit side to opposite account A limited account 15,60,000, and cash and bank account debit, so cash and bank on debit side to A limited account 1,80,000. Now you understand the reason of making this cash and bank account. 56,000 of old company is taken by the new company, but the new company is again paying back 1,80,000. So to account for that, we have to make this ledger account. I repeat, what is the journal entry for receiving the purchase consideration? Equity shares of A limited account debit 15,60,000, cash and bank account debit 1,80,000, to A limited account 17,40,000. Two A limited accounts, so A limited account on credit side by equity shares of A limited 15,60,000, by cash and bank account 1,80,000, opposite accounts. Equity shares account debit, so equity shares debit side to A limited 15,60,000, cash and bank account debit, so cash and bank debit side to A limited 1,80,000. Did you all understand this? Next, after purchase consideration received, sale of assets. Are any assets sold by B Limited itself? No. Land and building machinery. Business means all assets are taken over. No assets are sold. Okay. So that entry will not come. After sale of assets, payment of liabilities and payment of expenses and payment to preference shareholders. Three things. Here payment of expenses we don't have because liquidation expense of B Limited is being paid by A Limited. So we will pass the entry in the books of A Limited, transferee company. In the books of B Limited, this you can give the heading. These all are in the books of B Limited, transferor company. Okay. In the books of B Limited, no entry will come for payment of expenses because liquidation expense of B Limited is there, but it is paid by whom? It is paid by A Limited. So entry will come in the books of transferee company. Payment of liability, we have this compensation fund. Okay, how much is paid? 8,000. So workman compensation fund account debit, liability account debit, workman compensation fund account debit to cash and bank account. To cash and bank account 8,000. And we discussed it that entry that any difference will be transferred to realization account. But here no difference arises. Exact 10,000 was there and 8,000 is paid. 2,000 is already transferred to equity shareholders. If any difference arises, we would transfer to realization. Here no difference arises. To cash and bank 8,000. So cash and bank on credit side by workers compensation 8,000. I repeat it. Workmen's compensation fund account debit. So workmen's compensation fund on debit side to cash and bank account 8,000. To cash and bank. So cash and bank credit side by workmen's compensation 8,000. Okay, payment to liabilities, then payment to preference shareholders we don't have. Now after that, what did I say? The two steps at the end. Realization will be transferred to equity shareholders and all other accounts will be transferred to equity shareholders. Let us do that. Credit side is more. So first we do the total of credit side. 1740 plus 120, 18,60,000. Okay, 1740 plus 120, 18,60,000 minus 10 lakhs. So what is the balance? 8,60,000 to equity shareholders account. Okay, to equity shareholders account. In bracket, balancing figure, and of course it's a profit. Opposite side in equity shareholders account by realization account. $8,60,000. If at all journal entry was asked, here it is not asked. If at all it was asked, realization it is on debit side, so realization account debit. Equity shareholders it's on credit side, so to equity shareholders account, this journal entry we would have passed. Now what last two steps did I tell you? Transfer realization to equity shareholders and all other accounts to equity shareholders. A Limited already gets closed. 1740 both the sides. All other accounts balance you transfer to equity shareholders if any balance remains. Equity shares of A Limited we will give to equity shareholders. So by equity shareholders account, okay, all the other accounts balance remaining you transfer to equity shareholders account. Balancing figure 15,60,000 minus no amount on credit side. So 15,60,000 balance transferred to equity shareholders account. Opposite side in equity shareholders debit side, 2 equity shares of A Limited account. Okay, 2 equity shares of A Limited account, 15,60,000. Then which account other balance remains? Workman compensation gets closed. Cash and bank. So whatever cash and bank is left out, that also we will give to whom? Equity shareholders. 2,36,000. 2,36,000 minus 64,000. So 2,36,000 minus 64,000. That comes to 1,72,000 by equity shareholders account. By equity shareholders account in bracket balancing figure. Did all of you understand this? Okay. Opposite side in equity shareholders, again it will come to cash and bank account. To cash and bank account. What amount? Amount of balancing figure 1,72,000. Now if at all journal entry was asked, again equity shareholders, it's on debit side, so equity shareholders account debit to equity shares of A Limited 15,60,000 to cash and bank 1,72,000. Okay, from logic point of view, equity shareholders are the receiver, debit the receiver, equity shareholders account debit, and we give them equity shares and cash. So equity shares goes out, cash goes out, credit what goes out to equity shares of A Limited to cash and bank account. Now finally I told you equity shareholders must tally, means it must also get closed. So you can see here 17,32,000 is the total of debit side. Now see on credit side. Okay, this profit and loss account, everyone make a correction in the balance sheet. It was 1,10,000 and we have written only 10,000 by mistake. So all of you make it 1,10,000, and if you have already written it correct, then you people are genius. Very good. From the beginning you have made the right entry. So that would come to 17,32,000. Okay. So equity shareholders account gets closed, it gets tallied, means your entries are, chances are there that your entries are correct. Okay. Now a suggestion is there, all of you understand it properly. You are asked also the accounting entries in the books of A Limited, so I'll be doing that right now. All of you can pause the lecture, half an hour, 1 hour, go and relax, do something else. Go on Amazon, go on Netflix, have some lunch, have some breakfast, have some tea and come. This is very tensing topic, stressing topic. Overall, it's a very lengthy lecture. Okay, so have a break of around 30 minutes, then come back and watch this lecture and then do the entries in the books of A Limited. Okay, so I am taking up the entries of A Limited. When you come back, ideally first you make the format. Okay, first you make the format of journal entries in the books of A Limited, then you watch this portion. So first entry in the books of A Limited, we have to follow purchase method of accounting. Purchase method of accounting. So business comes in, debit what comes in, business purchase account debit. Okay, and to liquidator of transferor company account. So to liquidator of A Limited account, sorry, B Limited account. Only one company is there here, transferor company. Only one company is going into liquidation. And what is the amount of purchase consideration? 17,40,000. Okay, business purchase account debit to liquidator of A B Limited Transferor Company account with the purchase consideration 17,40,000 being business of B Limited purchased. Being business of B Limited purchased. Now, before we pass the second entry, we will have to make the workings. Which workings? Since it is purchase method of accounting, you all must remember this, okay? Which workings? This one. We have to find the difference between purchase consideration and net assets. If we are paying more goodwill, if we are paying less capital reserve. So, let us first find the net assets taken over. Okay, we have to compare purchase consideration with net assets. So, net assets means agreed value of assets taken over. Before we pass the second journal entry, this working will be required. Agreed value of assets taken over. See the balance sheet. What are the agreed values? Goodwill 1 lakh, don't take. Why we don't take? Understand the logic behind this. Okay, why we don't take the goodwill? Because as such in this entry, difference you are going to transfer to goodwill. So goodwill cannot come two times. Goodwill cannot come two times. Whatever balancing figure comes, that will become the agreed value of goodwill. So whenever we have purchase consideration by net payment method, I repeat, whenever we have purchase consideration by net payment method, goodwill given in the balance sheet will not be taken into consideration. You can write this as a note somewhere in the beginning of your lectures. In this purchase considerations, you can mention as a note in that lecture or in your pamphlet that if net payment method of purchase consideration is there, then goodwill of balance sheet will not be considered. Whenever we have net payment method, then goodwill of balance sheet will not be considered. Okay, keep this in mind. Logic, as I explained you, already the balance amount we are going to take to goodwill only. So two times we cannot take goodwill into consideration. Okay, so we will take other assets other than goodwill. Land and building 4 lakhs. Is any agreed value given? Yes. We will take land and building what value? 9,50,000. Agreed value of assets. So land and building 9,50,000. Okay. Then after land and building, which is the next asset taken over? Plant and machinery. Is any agreed value of plant and machinery given? No. So I made you write as a note. For tangible assets, if no agreed value is given, book value. For plant and machinery, no agreed value is given, so book value 2,40,000. Okay. Plant and machinery 2,40,000. Also, I made you write as a note. For intangible assets, if no agreed value is given, nil value. That's why goodwill we take nil. But for goodwill, there is one more logic. Difference between net asset and purchase consideration, we are already going to take goodwill. So goodwill cannot come two times. That amount straight away will take as goodwill. Then stock in trade 1,68,000, but its agreed value is given 1,40,000. So we will take stock in trade 1,40,000. Okay. Write down stock in trade 1,40,000. Stock 1,40,000. Then after stock, okay, after stock, next asset is debtors. Debtors, we discussed the agreed value is 32,400. So write down debtors 32,400. Then after debtors, cash and bank. Cash and bank is always book value. So 56,000. Cash and bank 56,000. So So this is the agreed value of assets taken over. What does the total come to? Do it in the calculator. 9,50,000 plus 2,40,000 plus 1,40,000 plus 32,400 plus 56,000. 14,18,400. Okay, 14,18,400. From that we will subtract agreed value of liabilities taken over. Okay, agreed value of liabilities taken over. Now what are the agreed values of liabilities taken over? First we have 10% debentures, 1 lakh. No, wrong. See, we have done the workings. 10% debentures, agreed value is how much? Agreed value is 1,20,000. We are giving them 20% more. So 10% debentures, but what is their agreed value? 1,20,000. Creditors are taken at book value only, that is 20,000. Okay, creditors you all can see in the question, they are taken at book value only, that is 20,000. So 1,40,000. Okay, two liabilities are taken over, and what is that value? 1,40,000. So what is the total net assets? Assets minus liabilities. 14,18,400 minus 1,40,000, that is 12,78,400. These are net assets. Now we have to find difference between which two things? Net assets and purchase consideration. Okay, we have to find difference between net assets and purchase consideration. What is the purchase consideration we are paying here? See in the previous working, 17,40,000. How much more are we paying? If you compare with 17,40,000, how much more we are paying? 4,61,600 we are paying more. That we will debit to goodwill account. Okay. So what is goodwill? 4,61,600. Got it, everyone? Now understand the logic again. Why we did not take this goodwill? Because goodwill given in the balance sheet is how much? 1 lakh. But we are paying not 1 lakh for goodwill. We are paying how much for goodwill? We are paying what amount for goodwill? 461,600. Now suppose you would have taken goodwill here. Understand it. Suppose you would have taken goodwill 1 lakh. Then what would have happened? That goodwill, if you would have taken 1 lakh, then this would have become 15,18,400 minus 140, 13,78,400 minus 17,40,000. Then it would have become how much goodwill again? 5,61,600. Will you write that goodwill 2 times? No. So goodwill will come only 1 time. Therefore, we did not take that goodwill of 1 lakh. You cannot pay 2 times for the goodwill. Did you all understand this point? So whenever we have net payment method of purchase consideration, goodwill given in the balance sheet will not be considered, because difference amount we already transferred to goodwill. Okay. Now directly from this workings we will pass the journal entry. Assets account debit, so straight away land and building account debit 9,50,000. Okay, assets account debit at agreed values we are doing which method of accounting? Purchase method of accounting. So there we have to take assets account debit excluding fictitious assets, other non-current assets and other current assets, and at agreed value. So 9,50,000. Directly from the workings now we can pass the entry. Then see the next, plant and machinery account debit 2,40,000. Okay, plant and machinery account debit 2,40,000. Then after plant and machinery, stock account debit 1,40,000. Okay, stock account debit 1,40,000. Then after stock account debit, debtors account debit 32,400. Debtors account debit 32,400. Then after debtors account debit, cash and bank account debit 56,000. Cash and bank account debit 56,000. Then after cash and bank account debit, goodwill account debit 461,600. Don't forget that. Goodwill account debit in bracket working note 3 4,61,600. Okay, and then two liabilities. So two 10% debentures 1,20,000. Two 10% debentures account 1,20,000. And then two creditors account 20,000. Two liabilities excluding reserves except statutory reserve. For statutory reserve, that is export profit reserve, will be passing a separate journal entry altogether. Okay, that statutory reserve of export profit reserve is not to be included in this journal entry. Okay, so two liabilities excluding reserves, and then to business purchase account. Okay, to business purchase account, you will close with what amount? 17,40,000. Same amount what you debited in first entry. And what did I tell you very fast? Second entry, it's a very big entry. So verify the totals of debit and credit. If you verify the total of debit, 9,50,000 plus 2,40,000 plus 1,40,000 plus 32,400 plus 56,000 plus 4,61,600, it comes to how much? 18,80,000. Same way, if you verify the total of credit side, it comes to how much? 1,20,000 plus 20,000 plus 17,40,000. That also comes to 18,80,000. So just after second entry, always do this step, because if the total comes same, means your entry is almost correct. Okay. Being assets and liabilities of B Limited taken over. Being assets and liabilities of B Limited taken over. Okay. Now third entry, settlement of purchase consideration. So liquidator is the receiver, debit the receiver, liquidator account debit, liquidator of B Limited account debit. With what amount? See the first entry to get the amounts. Liquidator of B Limited debit with 17,40,000. Okay. Now what are we giving to them? Equity shares. See the purchase consideration. Equity share capital 1,20,000 shares, but share capital multiply with 10 rupees only. So to equity share capital account with only face value, that is 1,20,000 into 10 rupees, 12 lakhs. Then remaining 3 rupees of premium will go to security premium account. Here also we discussed in the beginning, 3 rupees of premium is there. So 3 rupees of premium on same 1,20,000 shares will go to security premium account. Same 1,20,000 shares into 3 rupees of premium, 3,60,000. And then cash is also paid. So cash goes out, credit what goes out to cash and bank account, 1,80,000. Okay, 1,80,000 is paid in the form of cash. So payment, all of you can pause, rewind and listen again if there is any confusion with this entry. Being purchase consideration settled. Being purchase consideration settled. Okay. Still I repeat it once again. Liquidator is the receiver, debit the receiver, liquidator account debit with 17,40,000 to equity share capital 1,20,000 into 10, 12 lakhs To security premium 1,20,000 into 3 rupees of premium 3,60,000, and to cash and bank account 1,80,000. Got it everyone? Then last, next entry. Now, issue of shares in the public, do we have? We don't have. Any adjustment where it is mentioned that the shares are issued in the public? No. After issue of shares in the public, liquidation expenses, that we have adjustment 3. Cost of liquidation of B Limited 6,000 was paid by A Limited. So what did we discuss? 6,000. In the purchase method of accounting, goodwill or capital reserve account debit depending on second entry. Since in the second entry we have goodwill and not capital reserve, so goodwill account debit with 6,000 to cash and bank account 6,000. Why are we paying the expenses of transferee company? They are liquidation expenses of transferor company. Why is transferee company paying that? Because of its reputation. So goodwill account debit to cash and bank 6,000 being liquidation expenses of B Limited paid. Being liquidation expenses of B Limited paid. Then fifth entry. After that, do we have any registration expenses, establishment expenses, incorporation expenses, preliminary expenses? We don't have. Last is settlement of liabilities. 10% debentures are issued, 12% debentures, and that also we have seen they are issued at par only. So simply settlement of liabilities, 10% debentures account debit. Okay, 10% debentures account debit with what amount? This account you will debit and close 1,20,000, and against that to 12% debentures account 1,20,000. Okay, we have issued 12% debentures against that of 1,20,000, being 12% debentures issued against 10% debentures. Being 12% debentures issued against 10% debentures. And are the entries over? No. Statutory reserve separate entry we have to pass. Don't forget that. Amalgamation adjustment account debit to statutory reserve account. Okay, amalgamation adjustment account debit to statutory reserve account. And what amount? See the statutory reserve, export profit reserve 80,000. Okay, export profit reserve. Statutory reserve means here we will write which reserve it is. Export profit reserve 80,000. Okay, export profit reserve 80,000. Amalgamation adjustment account debit to export profit reserve 80,000. Being export profit reserve taken over. Being export profit reserve taken over. Okay, so all the entries are covered over here. Now totaling is to be done. Formality, total of balance sheet, total of journal is required. So what will be the total? Do it everyone. Come on. 17,40,000 plus 18,80,000 we got at that time, plus 17,40,000 plus 6,000 plus 1,20,000 plus 80,000. So total of journal comes to 55,66,000. Okay, so all of you should have understood this question. Now the other question which is there in the homework for today, question number 4, that only workings is to be done, only purchase consideration is to be obtained. So all of you must be able to try question 4 on your own. Okay, that will be all for the today's lecture. Bye everyone. See you in the next lecture. Take care.